Good morning, everyone, and welcome to the European crossover webinar. And I hope the mic's working good today. I know we had that problem on Monday, which caused a delay. So I'm hoping not having any issues. I think it seemed okay. Um, let's go in and bring up the calendar. Kind of rearrange the screens around, so just bear with me. So we did have German import prices. I'm not sure if it makes that much of a difference, honestly. Reuters poll was for up 0.2%. It was up 0.6. We do have loans to households. That hasn't even come out. Mexican trade balances later today. We do have advanced goods trade balances and wholesale inventories once we get into the States. And we do have Dallas Fed manufacturing index, which generally moves the market a little bit. And this national activity index. Now we do have, obviously, the key events this week is going to be, we do have BOJ, and we also do have the FOMC. At the end of the week, we do have employment report, so we shall see how that comes out. Rolling into tomorrow, we'll have, let's take a look here. Early in Asia, CPI, but French consumer confidence tomorrow, as well as Italian PPI, Bank of England consumer credit, Case-Shiller. Obviously, these are for tomorrow. Consumer confidence, pending home sales, Dallas Fed, but this time would be what you would call services, not manufacturing. Then on Wednesday, we'll have a Spain flash, German unemployment. That'd be a little bit key. Eurozone business climate and sentiment. Once again, like I said, there'll be a Wednesday. And German CPI, preliminary CPI. Wednesday, ADP. Obviously, the FOMC. On Thursday, Halloween Day, retail sales out of Germany. Some key numbers: Italian consumer prices, HICP flash, and challenger layoffs, jobless claims, Canadian GDP. This is on Thursday. And of course, Friday, we have non-farm payrolls. And let's see, market manufacturing for Canadians. So it'll only be U.S. non-farm payroll as opposed, sometimes, not very often, but sometimes Canadian U.S. jobs come on the same day. ISM manufacturing will be on Friday. So there we go. But as we come into the States today, we did have German import prices. And we'll have wholesale trade and inventories today with Dallas Fed manufacturing. Let's go and move this out of the way. So we've seen a quiet start to the week. We got the euro just a bit as we came into close to some support. I was looking on Friday for 1065, which was a 2-hour level, and also the 38%. I think the low was 1072, so it wasn't too far off. Dollar CAD continues to struggle, but it hasn't dipped down to that 3043. Cable just working just a bit higher. Obviously, dollar index edging a bit lower, just a bit. We talked about the significance of the 97.89, that huge weekly level, and we said, hey, look, it's a sell no matter what until, it would have to close above 97.89 on a weekly, and even then it would just simply offset the negative on this. Let's take a look here. Bunds is actually pushing a little bit lower here, so that's going to be supportive for the euro. You can see that here. I just have a couple of volume charts I use for intraday on these markets. S&P is still holding up very well. Look at that. And gold, we talked about that key level on Friday. Remember, I talked about the 15.16 here on the spot, and we talked about, because we were talking about 1509, they said, hey, watch out, we can still make it, we can make it potentially up to 1516, and sure enough, we did. We took it up by just a little bit, and then we really saw pretty deep, a decent, pretty, I guess you could call it a bit of a deep correction, because we came off quite a bit. Crude oil is still holding up in this area here, potential. We do have some levels, resistance levels in here in this 56.51. We talked about 56.62. But there's a potential still for 57.15, and it's also the 50%. We'll see whether or not we can make that run up in here. We'll also take a look at the cross rates. Bear with me. Kiwi yen continues to stay a little bit on the weak side here. A bit of a surprise from there. Euro yen strengthening just a bit. Guppy coming off these lows, but still actually, you know, consolidated around this 140, which is really huge, to say the least. Aussie yen relatively quiet. So let's go and move into the news. Drink real quick. As I said, just bear with me a little while. Bear with me a bit. I moved things around here across the screens, and so it's trying to make sure I click onto the right screen. There you go. So the dollar picks up before the Fed, and the pound braces for the EU meeting on Brexit. The dollar traded near its highest in more than 2 months versus the yen on Monday ahead of a U.S. Federal Reserve meeting this week, where policymakers are expected to cut interest rates but emphasize their reluctance to ease policy further. Sterling edged lower versus the dollar and the euro, with an agreement expected later on Monday to delay Britain's divorce from the European Union to January the 31st. After Prime Minister Boris Johnson failed to win approval for his Brexit timetable. China's yuan rose its strongest level in 2 weeks on Monday after Beijing and Washington said they were close to finalizing a first stage agreement to scale back the trade war, but some traders tempered their optimism because a quick resolution is far from certain. The market focus will shift to the Fed meeting ahead of October the 30th and the Bank of Japan meeting ending October 31st. The Fed is expected to cut interest rates for the third time this year, but fixed income analysts say that this is largely priced into the market. The BOGA is leaning toward keeping policy on hold next week. But the decision is a close call as policymakers struggle with threats to the global outlook from U.S.-China trade war and Brexit. I don't know why I said on hold till next week, on hold next week, because it's actually this week. It even says in the story. I'm kind of confused by that. A Fed rate cut is already factored in, but the dollar could be bought back if the Fed somehow signals it won't cut rates any further, said Yukiya Shizuki. Until we can confirm this, the traders are likely to adjust their existing positions in the dollar. And that's about it on that. Bear with me. So more than 3 years after Britain voted in a referendum to quit the EU, the country and its parliament remain divided over how and whether to leave, and how the matter was triggered in a spiraling political crisis in the UK. The dollar index against a basket of 6 major currencies stood at 97.84, also near its highest in more than a week. The Fed meeting this week is widely expected to result in a cut in interest rates of 25 basis points, and has been priced in, but some analysts expect the Fed to sound hawkish by signaling its reluctance to cut rates further. I don't know if you'd call that necessarily hawkish. U.S. currency got a mild boost on Friday after Trade Representative's office said it's close to finalizing some parts of the trade deal with China. On Saturday, Chinese ministry said technical consultations on some parts of a trade agreement were basically completed, but investors are likely to remain skeptical because even a partial deal would not eliminate risk posed by the trade friction. News was pretty slight. We didn't even have the morning bid. We get that, so I thought might as well hit up the gold since it's been moving around. And we saw a pretty decent little move here. We started in Asia kind of quiet. We bumped up here to about 15.11 in the December futures, and we've dropped now to 15.07. Gold is up on Monday after a near 1% jump in the previous session as investors waited a U.S. Federal Reserve's rate decision later in the week, while progress in U.S.-China trade talks curbed appetite. All eyes are on the Fed meeting, but what investors are really looking forward to is some clarity on whether the central bank will continue to remain dovish for the rest of the year, said John Sharma, economist with the National Australian Bank. The Fed is scheduled to meet on October 29th and 30th, with traders seeing a 90% chance for a 25 basis point cut. Gains if Fed cuts this week, but may be limited as trade tensions are not as tense as they were over the summer. Trump said last week the U.S. was doing very well in his trade negotiations. Yeah, but when has he not said that? The remarks boosted appetite for riskier assets. Both U.S. and China have imposed a series of tit-for-tat tariffs over the past 15 months during global recessionary fears and driving gold prices more than 17% higher. But the recent development has put a lid on gains. However, Sharma said, any development in the trade war will just have an interim effect on gold. Gold prices are already being weighed by a strong dollar, which makes the metal expensive for buyers. So let's go and move into the analysis. Bear with me. So since the euro is paired back after stalling above 1150, solid support comes in at 1070, confluencing with 1065. The 38% resistance is going to be 1130. So let's go and actually put this on the chart. So you can see the 1065 here, the 38%, 1070. Well, 1070, we got as low as 1072. We're still going to call it 1065 just in case. So we'll keep this. Let's see. Where the heck is my? There we go. 1065. And we said that we're looking for resistance at 1130. We're going to give it the benefit of the doubt because it is holding above the 38%. You can see that here. So the bias is still going to remain bullish. And as I mentioned, looking at 1130, those are going to be the key levels as we move up in here. You can see this level coming right there. So right at 1130, and we're going to go 1065. We are holding above the 38%. Bear with me. So let's go move into cable. So cable pullback has the potential to 2743, confluencing with 2763. Oh, I didn't have this one thing. Okay, yeah. Resistance is going to be 2913. So potentially we could go on and slide back. Yeah, a bit on the bid right now. So let's go 2913. Obviously still bullish. With me. Just grab some coffee pretty early in the morning. Support, we've already had a pretty decent little pullback. I mean, potentially we can go down to 2743, but I don't want to. You can see that right here. Start that. Let's go right there. Yeah, let's go with that, 2781. You can see that comes right across here and just a hair below this low. So well, I'll tell you what, we'll even call it 2780. 2780. Let's go move into the Aussie dollar. The Aussie slid back to the breakout level of 68.09. The daily close below 67.91 will push the sell stops. Resistance remains at 68.80. We're staying in a relatively tight range to a certain extent. If you look at this, it looks like it's a wider range, but it really hasn't been. This 68.09 has been the key breakout level, and we came down here to challenge it. That's going to be support right now, 68.09. Right there, and we did actually tighten it up in here at 68.62, but we're starting out the week. This is going to still be the key area up here looking forward. Now, like I said, we moved it lower on Friday because we were closing out the week, but it's back up here to 68.80. You can see that here on the Aussie. And we're giving this the benefit of the doubt because we still are bullish on here after this breakout. We're going to move into the Kiwi. Hang on a moment. Bear with me one moment. Just making a comment in the chat room. Apologize. And so let's go and move into the Kiwi. And once again, even though it looks like the movements have been, a bit of a move here, it still has, after Fridays, you can see how quiet we're trading there. It still seems, like I said, the moves are not that big. I mean, they look kind of decent from here, but you look at it and you go, the ranges are still fairly tight, Heck, we didn't even make it to 64.50, you know what I mean? So of the whole move here, you can see over the course of a few days, we're still within a 100 pip trading range. But anyway, that being said, the Kiwi slide into key support 63.43. Additional support is 62.97. Resistance remains 64.36. So that's where it's going to be, and we're almost there. We may have already hit it. 63.43. We had 37. I guess we'll keep this from here. It's just the low today has been, well, right there, 63.42. So we'll give it we had this on Friday, so we'll give it that to hold. And 64.36, once again, is still going to remain the key as we're into the new week. Let's go move into the dollar CAD. The dollar CAD has remained weak throughout the prior week with no signs of life. Support level is 30.43 and can provide some demand. Resistance is 31.08. Man, I would have thought we would have seen some semblance of life, and we didn't. And I mean, just on the thought that we've already fallen so far back. I would have thought we'd seen a little bit of a bounce. Nothing. So 30.43 is the support. No changes there. 31.08 on the upside. If we can get a bit of an upside, we'll come in as our resistance. Obviously, the bias is bearish. Not a whole lot to see from there other than what's the obvious. Taking my turn, drinking water, and then coffee, and then water. So let's go move into the peso. So the dollar peso continues the downside momentum after sliding below the breakout level of 1923.6. Initial support is 1902, followed by 1892. Resistance is 1916. So there's our 1902 we've been talking about. We mentioned even last week. I mean, that was our secondary support. Remember, we had 1908 and it got to just a hair under 08 and kind of moved a little bit higher. So it's 1902. As we said, followed by 1892. So we've got 1902. We're going to give it the benefit of the doubt. So we're going to say 1902 right there, which was the same we already had on Friday and Thursday. So we're going to go for that to hold. And then on the upside, I think we put 1916. Yeah, we're going to go with 1913. 1913. The dollar yen remains on the bid ahead of the BOJ. Initial resistance is 888, followed by major weekly level 927. There'd actually be some additional resistance at 908, but once you get past 888, it doesn't mean we can't pause at 908. It just means that, like I said, if we get past 888, then the eyes are really going to focus back to this weekly pivot, which still be a pretty tough row to hoe to get above that. But we'll go with, I think we had that before, 888. And on the downside, support is 828, which is what we had before. So no changes. That's what I'm saying. We've been rather quiet overall. So some of these don't seem to have had that much of a change. Let's go and move into the cash dollar index. The dollar index finished the week on the bid, but was not able to clear 97.89 for the weekly close. Dollar resistance is 97.89, followed by 98.11. Support is 97.46. So there we go. 97.89. And if we were to get beyond that, I think it is important to put this past here, but 98.11. There you go. I think I'm going to remove the little period because I think it makes it difficult to read. Let's go with this. Since we have both of them there, both of them. There we go. And on the downside, 97.46. With that, let's go on and move into the cross rates. The QEN is giving ground after forming a gravestone doji after a successive run. Pair remains in a buy mode with support coming in at 68.70. Resistance is 69.78. So you can see here we had a very nice run up in here, and then we had this gravestone doji. I'm market made a pretty nice value in an attempt to get back above here, challenging this 50% here again, but then we rolled over and it's been on the slide since then. So once again, support's going to be 68.70. And resistance is 69.78. Says the euro yen is stalled above 21 even. The downside for the start of the week should be limited ahead of the BOJ. Support comes in at 1973 with resistance at 2150. You can see here, so basically we're getting ourselves ready ahead of the BOJ. So there's your key resistance. You can make the case a little bit more 2112. And that's the resistance for the week. As we get, if we can challenge here. Yeah, I guess for looking into today, I guess for right now, we'll go with 2111. 2111, and support comes in at 1973. Let's go and move into the euro odd. So the euro continues to mark time in a 100 pip trading range for the most part. You can see here we've been trading forever, it seems like. For the most part, deeper support is 61.76 with upside resistance at 63.78. I like the 61.76 from here, looking at overall, okay? And resistance, let's just go right there, 63.16 for resistance. We're barely hanging on to a bullish picture. You can almost say it's neutral at this point. You know, I am going to go and switch that to a range. Let's go to the Euro Kiwi. Working a little bit higher. The Euro Kiwi has found some minor short covering after a failed upside breakout. Resistance is 75.26 with support at 73.09. Well, the 75.26 is reasonable, I think, but we have found the support here, and we're trying to get back above the. Oh God, I can't even think of the word right now. Where these two coincide, I cannot think of the word. The apex, but we're going to go right here with support. You see this line coming right there, those touches here. So let's go 73.56 and 75.26. 73.56, 75.26. And let's go on and move into, hold on. Basically comes in at 73.59. Doggone it, I got this on. Knew that was wrong. 59, 75.26. And let's go and move on to the ASEAN. The euro, doggone it, what the heck would I put it on that side? Hold on, got it. For whatever reason, I call it the euro, but it's the ASEAN here. The ASEAN is consolidating above 74. The pair should hold its own ahead of the BOJ. Resistance is 74.73. We can see it up here. 74.73 with support at 73.45. So 73.45. Boy, this thing is trading in a really tight range. Look at that. But we'll go with that. 73.45. and 74.73. Moving on to the guppy. The guppy is consolidated close to major level 140. The pair has room to challenge 141 ahead of the BOJ. Support is 38.20. So this thing can move rather quickly. I think we do want to keep this at 38.20, and the resistance is actually going to be right there at. Let's go right there, 40.38 right now, ahead of this, 40.38 and 38.20, 40.38 and 38.20. But it's, got to give it the props here, staying right here at 140. I mean, that is huge. After this movement, we're not giving up. We're not giving hardly any ground. Let's go and move into the sterling versus the odd. Starting on after a strong upside breakout, the pair is consolidating just below 89. Resistance is 89.71 with support at 86.02. We're still holding our own here. Seems a bit of a stretch here. See this bar coming right across here, this touch right there, 89.26. So we're going to go with 89.26. Support right there. Just keep it just a dip higher, a little bit dip lower. 86.84. Right there. And you can see just coming across here. You see here, right there, just below that, this last peak right there, the prior peak, right there. And you can see here with the S&P still holding a pretty steady bid up in here. That 30.23 I was talking about this Friday in the chat room. I thought that was a pretty good risk reward level. And I didn't even take advantage of it, but we did take a dip. Now we've come right back to challenge it. Gold still holding its own up in here, although we have gone and pared back a bit. Crude, still the upside is still open, but we have run into some resistance at 42, 51, and 62. This area right in here. I actually got some numbers ahead of this today if we were to see a BOP, which would be 56.90 and 57.15, 57.33. Boons coming off of these lows, so that may impact the year just a bit. Other than that, and 10-year yields working a little bit higher. Other than that, that's it. But thanks for joining us here on the European Crossover webinar. We'll see you in the FX Daily Wrap-Up.